Same structure, of course. Let's check momentum again. So we got the bounce that we're looking to take yesterday, and I believe some of us did the longs. If we still have the longs, we want to close out. The entries were around 155.10. Right now we're 156.09. We were expecting a bounce out of the lower boundary of the ascending triangle, and we got the bounce out of the lower boundary of that ascending triangle. Bear with us a second. All right, so we got the bounce out of the lower boundary of that ascending triangle. It shows more strength, I believe, on the 45 minutes, but it does show on more strength. So that's it. That's what we really got. We had 5 swings all the way down here. Market bounced. Again, this is going to be probably an A, B, and a C. So tomorrow we may get a dismal NFP, unlike what most of us believe, including sometimes myself. The lower boundary of that ascending triangle is not going to break to the downside. And this is the current sentiment, market sentiment, displayed over the past, months or so. Unlikely to change, probably just because we had a weaker or dismal employment number. We're still doing a consolidation at the market top, awaiting for that fundamental to show a weaker yen and for the dollar to break higher. Remember, Federal Reserve is intent to hold rates higher longer, and therefore, even if you have a weaker employment number, you would still want to hold your money in dollars because you're getting paid more yields. You are getting paid more interest until the Federal Reserve decreases rates. And the difference, of course, the interest rate differential between the dollar and the yen is very high. You're still holding your money reserves, your individual monies in dollars. All investment firms are doing this because they're getting more interest rate differential or more yields until they begin to commit to do a transaction in Asia, and then they reverse it into yen. And this is giving the market the necessary support to stay put at current levels and move higher. And therefore, tomorrow, NFP, if we have a weak NFP, all that's going to happen, we got to bounce all the way to 156 today, this level. We're going to attack back that lower boundary of this ascending triangle, maybe even go to 155, 154.90. We actually bounced 154.75 last time. Maybe attack that level again. And then once NFP is over, market bounces. And we're attacking 158. We're attacking 157.60. All right, so we are really getting the same structure, probably the same structure that we're seeing with the sterling yen. Let's take a look now at it in more detail. So over here we've had that a bit labeled, but not entirely. Like I was saying, if we are doing a 4C, we've just done a 4A, 4B. A C is really an A, B, and the C. And B may not yet be finished. The B may be a 1, 2, 3 internally. So we finished 1, we're getting 2, we're getting 3, becomes, of course, this is a 4C, becomes a 1 and a 2, and then we get another 3. We get this one more time before the market begins to break out higher and out of that ascending triangle altogether. So probably we could still do another leg into the long. Maybe we'd want to stand down until release of the NFP because we just get lower lows. That's all. Let's take this now to 5, and I believe we're going to get the same momentum on all the structures. You're seeing negative momentum on the 1 hour, on the 45 minutes, on the 2 hours. The important ones are going to be the 4. Not really negative, just contained, and that's what we want to see. Let's take it now to 15 minutes, the feeds. We're looking at good positive momentum, and this one is easier to label. And the 5 is beginning to show negative momentum, show the cycle forward at that point. All right, so let's do the labels. Wait for the retraction. Can we do the shorts again? Yes, probably we can do the shorts. But of course, if we're shorting sterling yen, you don't want to short dollar yen, and the reverse is true. If we're shorting dollar yen, we're not shorting sterling yen. Which one to short? I would go for the dollar yen. Why go for the dollar yen? Because the central bank of Japan may consider that for any reason that we have no access to, that this is the prime time to strengthen their currency, and they're going to intervene in the market, and they want to do this, right? 148, 146. We talked about this several times. So it may not happen. Of course, there's a very weak chance of it's happening. Seriously. We believe there's going to be a correction just to 154 EK. But if this happens and we are not, if we're going to be taking a short anyway, then of course take the best. I mean, if this does happen, then of course it's a very good entry. We can just short it and let it run. We don't even have to use sell stops or, let's say, do exacting account management or money management. Right, let's do the labels then first. So we'd usually short the dollar yen, but long the sterling yen. And the Bank of Japan is usually focused on the dollar yen, meaning when they are intervening, they are probably buying yen and paying in dollars. Bear with us a few moments. The dollar yen is showing a different development than sterling yen, which is could be important to note. So this one is showing five swings, five intermediate, a bit higher swings on the 15 minutes. Because we get a bit of negative momentum on the 5 minutes, we didn't see this on the sterling yen, and so we have another high degree wave five. That's just what it means. It means we have a one and two at that point. When you see continuous positive momentum throughout, it's a three. You had a four because of some negative momentum, and you had a five. So this is really a five wave swing. It would mean that also the retraction is 50%, the retraction is a level three, and that the market is intent on going to 158.40. That we are not going to see all these projections that we keep showing. We are not going to see this. We are really not going to have a deep retraction. The maximum we are doing at this point is so the maximum we're doing at this point is 155.20, 155.70, because we're bouncing the 200-point moving average and still continuing higher to do shoulder levels, or continuing higher to break out of this ascending triangle at this point, like these two green arrows shows. The market is still attacking the Bank of Japan's cap. Maybe there's going to be a positive NFP number, maybe just a dismal NFP number. The interest differential is much more important than that NFP number, because projections of lower interest rates, all right, so far that they are still in the future, are really meaningless to people holding the actual money or the actual capital. They would still be earning interest until there is decrease in the current interest rate regime. All right, so we believe this has shown that both pairs will be tilted to the upside. Dollar yen, sterling yen will both be tilted to the upside, and therefore, if we're going to be doing the short, it would probably just have a limited target, and the focus should be on the long. Even going into NFP here, because the long is probably, we're still going to get a leg 3 to the upside that's going to attack 158 and 158.40. All right, so I'm showing fibs here from top of level 1 to the origin of growth on the market. Retraction probably takes you to 38.2%, 155.27, 155.30. We're just probably getting a milder head and should be a long. Only we also, please note, we would only go on a trigger. So I could take the short down if I have the trigger. I will reverse if I have reversal trigger into positive momentum on the 5 minutes and 15 minutes, of course. I believe so far we are not getting any negative momentum to do a measure of the current to do a measure of the coming correction. But I'm sure that every one of us can do that on their own now. Asia session tomorrow's morning or tomorrow morning. All right, so at this point we're seeing a head and shoulders probably, so just barely does 50%, barely does 61.8% before continuation higher into a wave 3. That's really what we are going to be getting. Just a retraction, maybe a higher head, maybe just shoulder levels and continuation higher. If we continue to have see positive degree 3 momentum on the 5 and 15 minutes, it means that's a very muted shoulder, and we're able to continue higher immediately into wave 3. Right, I believe this brings us to an end of issues today. And questions. All right, I hope we have covered all that we're trading. Let's do a very quick recap. We're looking at a break to the upside in the US Tech 100. We were doing longs into this. We're also looking at probably a break to the upside in Bitcoin. We're also planning to do long entries into Bitcoin. We believe that we should stand out of gold until release of the NFP number, at which point we're going to get a trigger to the upside so that we can engage, or we're going to get a trigger to the downside and then can engage lower levels at, say, 2,280, between 2,280 and 2,240. We have updated our, changed our bias in oil. So the next leg is going to be to the upside, almost from current levels to $75.50 or $75.40. Would want to be out of the market before NFP, and then after NFP sell around $76 and $77, possibly to $70 next week, of course, and $68. We are looking at continuation of the strategies or the strategy that we are implementing in the yen pairs, dollar yen and sterling yen. We're going to be implementing the same trigger system that we're using. The next leg could be a limited leg, this Asia session or tomorrow's Asia session to the downside. All right, it could extend, but it will show on momentum if it does extend. So we'll just do a limited short going into Asia, and I believe by the time we go into European session, we should be reversing into longs in both United States dollar against the yen and sterling yen. The dollar pairs have not broken up to the upside, but we still need, I believe they're not going to be breaking out to the upside except on NFP day. It depends on what kind of dollar strength we see. If we see a poor number, we are going to have a breakout immediately higher in the euro and sterling dollars. We'd see a clear trigger and then long into it. If we still see some dollar strength, then it's best to only go on half size at lower internal supports on Friday for the euro and sterling dollars, if this is a feasible trade to take at that point. Maybe it would be better to wait next week. All right, so I believe we have covered all issues. I hope we're all doing well. I hope we have been able or will be able to create good yields this week. It's really been great having everyone with us today. We'll look forward to be all together again tomorrow. With this, I'll leave you all tonight. So wish you all the very, very best. Take very good care of yourselves, and good night.